The way I characterize it is, those assets do affect financial aid. But when you look at the student aid index calculation, it is overwhelmingly driven by the income of the parents. And then if the student has a lot of income or a lot of assets, that weighs pretty heavily. But assets that are owned by the parent are not treated as badly for the financial aid calculations. So I think the percentage is about 5.64% of the assets are counted toward that student aid index every year. And the thing I'll also point out is that if you're thinking about, well, do I save in a 529 or elsewhere? Well, if you have those assets in some sort of investment that's not in a retirement plan, they count the same, basically, the 529 or just, a taxable account or a brokerage account or something like that, or even a bank account. They count the same. So I wouldn't say that that's a reason to choose something other than a 529, instead of a 529. Um, and I mentioned earlier the thought of, well, hey, well, what if I put it in a retirement account? That's not counted as an asset. It's not counted as an asset, but when you pull it out, it's counted as income. So that's actually even worse. So I would say it's important to consider. And in a number of the questions you get, kind of the undercurrent of it is, well, should I be careful not to put too much into a 529 plan account? And I think the short answer is yes, you want to be careful not to put in too much that you're not going to use. But the flip side of that is probably more important. You don't want to be someone who is a relatively high income person, compared to the population, and have undersaved, because the financial aid calculation doesn't give you a whole lot of break in that situation. You don't want to undersave, just for the purpose of getting financial aid, because that might backfire on you.